Hi, I'm Suzanne Collins-Ford. I'm a licensed investment advisor, and I've been helping people to buy stocks for over 30 years. I spoke to one of my clients last week, and she remarked at how well her portfolio had done, and I said, you know, it really has been profitable. I only wish I could convince more people to buy stocks right now. The truth is, this is a historic opportunity. The growth of wealth in this country and around the world is unprecedented, but only for people who buy stocks. You know, it's August of 2014. We've seen a lot of volatility over the last month. Some things have been good. GDP growth has been around 4% for the second quarter. Job growth has been strong. Inflation is low. On the other hand, we've seen an Ebola breakout. We've seen Russian problems, Middle Eastern problems, Iraq problems. Very scary. And I know that's what comes to mind for you when you think about buying stocks. Risk. But think for a minute about how much has your savings made compared to what you could have made in the stock market. An average stock market fund has returned about 105% over the last 5 years, which means that if you started with $100,000, you would now have $205,000. You know, that's risk too. The risk of missing out. The risk of a missed opportunity. Now, I'd like to make 3 points that I think are important and relevant right now. The first point is there is still time. You can invest in the stock market and still participate in these returns. And we know this because the consumer is just starting to become a driving force. The consumer accounts for about 70% of an economic expansion. And right now, the consumer has had a rough time and has really not participated, but is just starting to. Wage growth is happening for the first time in years. And we're seeing some good spending. Retail has had a rough time because the consumer has been discerning and smarter than they've been before. But we've seen a good solid increase in the important companies. We have seen leisure sales up through the roof, and we've seen very strong auto sales. Now, if this continues, then we can see at least another 5 years of economic growth from the consumer, which means at least another 3 years of higher stock prices. The second point is that bonds are nowhere to be. Bond prices go down when interest rates go up. We all know that we've seen historically low interest rates over the last decade, and we expect to see them rise a little bit over the next year, which is not so bad unless you just bought bonds. Most analysts will tell you that the bond market is much riskier than the stock market right now. And think about opportunity risk. Why would you sit there making 1% in a bond equivalent when you could make 10% total return on average in the stock market? So this summarizes the idea that basically we're seeing 5 years of economic growth and 3 years at least of higher stock prices to come. A great time to buy and start a stock portfolio if you can, or add to your positions and let your profits run. Another note, in our last video, Stock Market Investing, we reviewed all the reasons for our investment strategy in detail. It's 2 10-minute videos that review why we think low interest rates will stay, the importance of global growth, the food industry, the medical industry, the energy industry, and how important they are. And it will give you all the reasons for our current investment strategy. We also have a 5-part video that reviews our methodology for building a stock portfolio. And if you'd like to contact us to subscribe to our monthly newsletter and get some of our investment ideas, please see bowoodpartnersllc.com or see all of our videos on YouTube. Thanks so much for tuning in, and have a great day.